Hello there, my friends, and welcome back to another episode of TA with McKay. My name is McKay, and in today's video, which is the fourth part to our little mini-series, the Beginner's Guide to Trading Your First Coin, we've been using XRP. We're going to do our final conclusion to kind of wrapping everything up, tying parts 1, 2, and 3 together, and just kind of showing you the entire process as we, execute a hypothetical trade. Now, if you just found this video because you were searching for something related to XRP, or maybe looking for some call-outs, or, buy or sell signals, that's not what this video is. It's a training tutorial video or series for people that are brand new to trading, trying to learn kind of my thought process and how I go through a trade. I've also been very clear in the videos up to this point that I'm not even actually looking to trade XRP right at this time. I've been kind of waiting for the market to give us some bigger signals, which I do believe are on the horizon. If you're looking for more of that, see the link in the description to my Telegram group. It's completely free. You can join there, and I'll give some analysis, as I see it. But as far as this training tutorial video or series goes, it's just catered towards new people trying to kind of learn and navigate the charts. Now, if you found this video and you are interested, but you haven't watched the other 3, those links will be in the description, parts 1, 2, and 3. I'd recommend pausing this video, watching those first, just so that you're up to speed before, you watch this final video. Now, with all that being said, we are going to dive in and go ahead and finalize this XRP setup. If that sounds interesting, please remember to like and subscribe, and let's go. It's TA with MK. It's TA with MK. So here we are, my friends. We are on the 1-hour chart for XRP, and one of the first things that I want to mention in the video is you're going to hear me say the word confluence several times throughout this video. Obviously, if you've watched the other videos or some of my videos in the past, you should know what that word means, but basically I just want you to understand that we're trying to find as many different things pointing in the same direction, many as different ideas as we can, whether that's bearish or bullish, whether we're looking to long the coin or short the coin. The more confluence we have pointing in the same direction, the better odds we have of the trade, playing out in our favor. So now as we zoom in on the 1-hour time frame, as we've navigated kind of the higher time frames up to this point to get all of our lines of support and resistance, and some of that was in the previous videos, what we're looking for here now is just some patterns on lower time frames to support some entry ideas for shorts or for longs. Now, one thing that we can spot right away is that you have what looks like an Adam and Eve double bottom. I'll put a little graphic on the screen so you guys can know what I'm talking about, but more or less it's just a bounce with a very, very steep recovery that makes the V, or as they call it, the Adam in the overall double bottom. That's the bottom number 1. And then the second side of that typically has like a falling wedge, formation or something similar, and you get a breakout of that, and kind of it more or less makes what's referred to as a rounded bottom. I know this isn't really perfect, but basically that's what an Adam and Eve is just a V-shaped recovery followed by a rounded bottom, a bounce at kind of the same area, which you can see here happened with XRP. And the target for the the breakout of the right side of that Adam and Eve is just the top of what's called the neckline. Now, because that's already played out, we're obviously not interested in trading that pattern, but one thing that we will be looking for as ideas to potentially short or long this coin is going to be the potential break and retest of the Adam and Eve neckline, or in this case, we'll just call it the double bottom neckline. So if I put a line here, this has kind of got the most confluence as resistance, 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 resistance. The other underside of that, you can kind of see there's been a little bit of resistance in here, right here, basically all in here there was resistance. So what I often like to do is, since I consider support and resistance a zone, we're going to go ahead and put a little rectangle here. Typically I use green for support in this case because it's above us and it's going to be at resistance at this point until it's broken. And so I'm going to go ahead and make it a red rectangle. Now the first thing that we're going to do here is get a target to the upside, if there were to be an upside move out of XRP, for this double bottom. And the way that you do that is you just find an area that's the kind of the zone where it bounced twice. In this case, this wick would be the lower end of the zone over here on the left, and the upper end of the zone would be kind of right here where both wicks bounced. Go ahead and take our green box. We're not really going to call this a support, but it's just kind of the zone that is the double bottom. And I'm going to go ahead and change those to green. Again, this is just bottom 1, bottom 2, and then we're going to get a measured move for that. I always like to do what I call conservative measured moves, which I'm going to take the top side of the bottom zone to the lower side of the top zone, and that's going to be my trend line that I'm going to use to drag up here to the potential breakout area to find if there's some confluence of a potential upside target. I'm going to go ahead and click Alt-H I'm going to change that line. For me, this is just my own personal preference for targets. I change it to yellow. And I'm going to look across and see, is there any confluence, number one, at that target, or could I possibly look to adjust it some? You can see that that area was resistance here. It's kind of been support all back in here and support here and here before it broke down there. So there is some confluence there. So that would be kind of my max upside target, which in this case would be about 17%. Now, what I would be looking for entry is actually going to be on the 4-hour time frame. So now that we've navigated over to the 4-hour time frame for XRP, I want to explain a couple of very important things as far as my entry and how I'm going to navigate or use my targets. So the first thing for entry that matters to me is the top side of this zone. I want to see a candle body close above it. And sometimes when I get over to the 4-hour time frame, I may adjust my zone a little bit. You can kind of see these bodies right here. They're dipping down into my top of my zone, and then these ones aren't quite reaching it. I can kind of just see on the 1-hour time frame that if I drag this down just a tiny bit, I get a little bit more a clean look, I guess you could say, or a little more confluence between where these bodies of these candles kind of closed and opened versus where these acted as resistance. And that kind of gives me just a clearer picture of where buyers and sellers would potentially be waiting. And in this case, while we're below it, it's going to be sellers. What I want to see for entries, I want to see a body of a candle close above this area. So you might get, say, this wick like we got here right next to it, but the body close below. I want to see a body close above, which in this case would be around 39.5 cents, followed by a second candle to follow it where it retests. And I don't care how far it retests. That's something I've actually mentioned in previous videos as far as retest candles. I don't care if there's a wick that comes clear down to here. As long as the body of the next candle also closes above that top side of that zone. You may miss some of the move, but just as far as my risk to reward and how I do trades, that doesn't matter to me as much as just seeing that there was enough strength or buyers to keep the bodies of those candles closing above that key area, in this case of 39.5 cents. Okay, so this next important thing that I'm going to mention, I'll make a separate video about in the future, maybe in the next day or two, just because it is a very, very important topic to understand. So I'm going to go through it kind of quickly on this video, but just understand that the higher the time frame support and resistance, the more important it is on the higher time frame trade that you're making. And the lower the time frame support and resistance, the more important it is on the lower the time frame type of trade you're making. What I mean is, are you making a midterm trade, something you're planning on holding for maybe a few weeks, maybe even a few months, or are you making a trade that's only intended to last a few hours or maybe a few days? So why is that important, you ask? Well, really, it's just as simple as understanding that if you're making a shorter term trade, you'll notice that price action may not be respecting a higher term time frame support and resistance as well as you would have otherwise thought it would, or vice versa. If you're making a longer term trade, you may notice, hey, it's not seeming to respect my daily or my 4-hour line of support and resistance. The reason being is because these levels are significant on those time frames for a reason. Someone that's investing in this coin, for a midterm hold, something they're looking to hold for a significant period of time, wants to see a weekly candle close, or several weeks close above. In this case, this area of 37.5 cents. They know then that that key area on a weekly time frame has been flipped, at least temporarily, from resistance into support, and at that point they may be looking to hold that coin, or for a more of a midterm type trade. Whereas if it's a shorter term time frame trade, you'll notice in this case on the 4-hour it blew right through that level as if it wasn't even really there. It took it a course of about a 4, 8, 12-hour period. It already flipped that area as support, but just as easily as it went through it this way, it could get rejected on this 4-hour level or this neckline of resistance and wind up going right back through that. Sometimes it's hard when you're new to trading to understand that, depending on the time frame or type of trade you're making, which areas of support and resistance are going to be more significant. Because in your mind, you're just thinking, oh, this week is a huge level, this weekly resistance, we broke through it, we should be going to the moon. How come we barely get above it and fall back below it? Well, it's because we're just at the beginning of a week right now. It's not significant until, Sunday night's closure, the weekly closure, whether or not the XRP was able to flip that key level, into support. In this video, we're going to focus a little bit more on some short-term trade ideas, just so you can kind of see my thought process. So I just wanted to get that out of the way, so hopefully you would understand that. But on here, what we're looking for is confluence for areas of targets to go along with my daily levels that I have above. Because to me, on a shorter-term time frame trade, these daily levels of support and resistance, like this one up here at just under 42 cents, and this one up up here just under 44.5 cents. Those are going to be key levels to take profits, or the other traders will be looking to take profits. So I'm trying to find as much confluence to set up some targets along the way, which you'll understand as we go through this. You'll see that I actually like setting up, at least 2 and often 3 to 4 different areas for targets. I'll also have areas where I will then bump my stop loss up. Oh yeah, stop loss. Let's talk about that real quick. So what exactly constitutes a good or reasonable stop loss, in my opinion, is a little tricky. And the reason I say that is I could put out an entire video, and really I should actually put out an entire video based on just this topic alone, because it comes down to several factors. Number one, what type of trade are you making? Again, because if you're making a trade based on higher time frames, you probably need a stop loss that allows for a little bit more of a variance, a little bit more of a fluctuation in price, because price action over the course of an entire week can do a lot more than it could do over the course of a few hours, typically, right? And so in that case, you would want to maybe allow for more. You shouldn't probably be using leverage. I typically, if I'm opening anything on a higher time frame, like a daily or weekly and above, based on completely just those ideas, well, then it's going to be probably just a spot trade. Maybe the highest I'd ever use would be 2x leverage. Nothing above that, in my opinion. Now, on the flip side of that, if you're making a short-term trade based on the 4-hour time frames of support and resistance, then you're going to have a little bit tighter stop loss, because, the ideas get invalidated much quicker on a 4-hour time frame trade than they do on the weekly time frame, naturally. That being said, I will put out a bonus video for this series in the next couple of days, just kind of going over some different time frame trade ideas, or examples, I should say. In this video, we're just going to stick to the idea of maybe a very short-term trade, something that may only be a day or two, that could turn into a week. We'll understand as we go through this why it could potentially take longer. But the ideas here are going to be something that would play out relatively quick should they go in our favor, or if they go against us, we'll be out of the trade relatively quick. Something a lot different than a higher time frame trade. So where would I be setting a stop loss based on the idea that we break above this, and retest, my criteria is met as far as the candle body closures, and I get an entry somewhere here between, we'll just say 39.5 and say 40 cents. To find that, I'm actually going to switch back over to the 1-hour time frame, and what we're looking for is a combination of things, and this is why it's not as simple as just saying, hey, use a 3% stop loss, or hey, use this or use that. What I'm looking for is a stop loss that makes sense with some confluence. I'm trying to find areas of support below us that potentially, if lost, I'd like to be out of the trade. Ultimately, when I come up with my stop loss, I need the risk to reward ratio between how much I could potentially lose to how much I could potentially gain to fit my own personal risk tolerance, which for me is at least a 2-to-1. A lot of traders aim for at least a 3-to-1. My own personal risk tolerance, I'm okay with 2-to-1. Anything much below that, I typically don't take those trades. Okie dokie, so we're going to go through this pretty quick, and you're going to kind of see my process with this. So the first thing that I'm looking for upon entry, which would be this break above here, right? So this was my entry, is what's the level of support that was just below where I entered. In this case, it's this blue line, which is weekly support and resistance. Was there interaction with that on the 1-hour time frame? Yes, there was rejection here, support in here. A little bit of a rejection there, and most recently a rejection there, a little bit of support. So the first thing I want to do is go ahead and click Alt-H just below that line, and then make sure I change that to the color red. There we go. Next, I want to look at that same line and see if there's any confluence of support just above that with the moving averages. On the 1-hour time frame, I really only care about the 200 moving average. That's a good pro tip, I guess we could add to this. Is generally speaking, it's not the greatest idea to be trading, long moves on these low time frames if price action is below the 200. If anything, you should be looking really just for short ideas. But anyways, in this case, I do have some confluence where the 200 moving average is above that previous line that I just put as a potential stop loss idea. From that point, we're going to switch over to the 4-hour and see if we're above the 50s or 200s there. In this case, we're below the 50s, so those will be potential target ideas because they are above us as overhead resistance. But we can see if we zoom in here that the 50 SMA, which is this red one, is also sitting there kind of around that same area that I put my stop loss. So we're 2 for 2 there on some confluence of some ideas of that being a support level where we may see a wick down and possibly a bounce. Now, do remember you can always pause the video and watch back on these things as we're going through this pretty fast, and that's not going to change. So here we are on the 1-hour time frame again as we're kind of jumping around. The next thing I'm looking for is any recent patterns the price action may have broken out of that it may want to retest. And with that retest area still be above the current stop loss idea I have for my trade. Now, in this case, I don't really see a very recent pattern here on the right side of this price action here for XRP, but let's just say, for example, before it broke out, and of course flipped this area that I've been tracking on the higher time frame as support, which would be my 39.5 entry. Let's just say the price action had come up here, got rejected, and then kind of consolidated in a bit of a falling wedge, something like this, and then it broke out of that and came up here and I entered. I might look back and go, okay, price action for some of these lower time frame traders hasn't ever retested that wedge, and so I might look at the top of that wedge and go, is that still above my stop loss? In this case, it's significantly above, if that were to be what happened. But I'm just looking to see if there's any patterns that I may not have seen on the 4-hour time frame that were there on the lower time frames that other traders might be looking for. That's one of the biggest things, is I'm just trying to put all the pieces of the puzzle together, because there's so many different ways people trade, and I'm trying to find the most confluence for everything that I do, whether that's targets or, in this case, the stop loss. This would be a good time to double check if this stop loss is going to fit my risk to reward ratio on the overall trade idea, which is this double bottom, potentially reaching as high as 45, just under 46 cents. So if I use this percentage tool, I can go from my entry idea of about 39.5 to 40 cents and drag down to the stop loss. As you can see, that's a little over 7%. Our upside is a little over 17%, so that is a little bit better than a 2-to-1 ratio, which does fit my risk tolerance. Next up, we're going to look at a couple of different target ideas for this potential trade. Now, targets can be as simple as just doing fib pulls, or just upper areas of resistance that are overhead, and so on. Now, I like to use Confluence, again, the word I mentioned earlier in the video you'll be hearing a lot, to find my targets, just like I do my entry, just like I do my stop loss. The first one that I do, which is one that a lot of people only use for their targets, is to take this last major swing high to swing low, which would be up here. We're going to drag from this wick up here, clear down to this wick down here and over. And we're going to look for areas that have confluence between fib levels, as well as moving averages, as well as horizontal lines of support and resistance. So the first thing that I'm noticing that I do like is that my measured move for my double bottom, which is the overall target that I'm looking for this trade, is just under the 786 and this weekly level of resistance. So that is a good area to have one of my targets. Now, as far as a couple of targets in between that make sense, you can see here that the 0.5 fib level is also just below where the this level of daily resistance and support is. So we're going to go ahead and put Alt-H on the keyboard, make sure that we change that to yellow if it's not, as yellow is going to be what I'm going to use as the color for my targets. And then we're going to look for at least one more target if possible or applicable. Now, I can see up here that the 200 EMA on the 4-hour is sitting here at about 43 cents. There also is a little area that it wicked to back here. So that's just a good area kind of in the middle between the upper end of my targets and where I entered. That would be a good spot to have as a target as well. And I'll explain in a minute why I like having 3 targets kind of spread evenly in this case. Now, there are other ways to find a little bit more confluence between different time frames. This is just a very simple way to find a few targets in between here using the fib level on the 4-hour, which is the time frame I opened this trade on, as well as the horizontal lines of support and resistance, and the measured move of my actual pattern. Next, I went ahead and quickly cleaned the chart back up. I deleted the fib tool, and I went ahead and used the text tool just to go ahead and write on the chart cleanly where my stop loss was and my targets. I'm also going to use this price range tool just for my entry point to showcase kind of where those targets would be as far as a percentage wise. Obviously, we already had this over here. The upper one is just under 16%. The next one right here is just under 9%. And the first target here on my lowest target is just under about 5%. Finally, before we wrap everything up on this video, I want to mention one more thing as it relates to these targets and your stop loss and kind of how you navigate a trade, or at least how I navigate a trade. It's a good idea to have a plan and write this down on your whiteboard as soon as you enter the trade of exactly where you're going to be taking profits at, and set alerts at all of those levels and so on. But one of the things that I use that I felt compelled to tell you about in this video as far as my strategy goes is that as soon as my first target is hit, I bump my stop loss up to just under my entry. A lot of traders will actually move it to entry at that point, which is fine, and actually advised as well if that's what you choose to do. The reason why I bump it just under is typically after I've taken some profits at the first level, which for me, I usually take about 25% profits at that first level. I just want to leave myself in the trade for the other 75, or for the other 2 targets, but my entry idea may be a level that after after it hits my first target, gets retested before a bigger bounce. So I like to go just under that a ways to leave some wiggle room for the idea that if it does wick below just a little bit, that there's at least a chance that it doesn't wick me out of the trade and that I stay in the trade, right? So that's just a good strategy to use. Again, I usually just go down below kind of wherever the zone of previous resistance that got flipped to support that made me enter the trade, which in this case was this zone between about 39 and 40 cents, and that's what I bump my stop loss up to. If my second target's hit, then I move my stop loss up to the just under my first target, kind of using the same idea. Then again, for my third target, once it's hit, I'm either going to close the entire trade out, which means I have no stop loss anymore, or I've closed all out but about 10%, maybe 15% tops, depending on if I was trading with the trend or not, and things of that nature. But let's just say I left 10% in the trade, then I'm going to move this up under, just barely under target 2, and then go ahead and come up with an idea for some new targets, which we won't talk about in this video, but it would be kind of doing the same thing all over again, just treating your second target as your entry, pulling some more fibs, and looking for some more confluence above current price action for some other, potential targets. One final pro tip, and we'll go over this some in the bonus video as we go over some other scenarios of trade ideas for XRP. Just know that if you're shorting a coin, a lot of people try to make this very, very difficult as far as coming up with exactly how they would do that different from a long coin, and it's really not different. And one way that can help you to understand that better is to click on your chart and click Alt-I in TradingView. What that does is it inverts your chart, and then you can do the same thing that we just did all over again for longing a coin. In this case, you're looking for upside targets, which because the chart is upside down, are going to actually be lower targets or lower prices for XRP in this case. You can do things like pull the fib retracement tool from this very last swing high to the current swing low, and you'll see fib levels that you could use above as targets. Look for confluence. Things like this daily level here is the same as the 786. So if the coin is getting rejected here, or in this case, since it's upside down, you're looking at it as a support bounce, which really is a rejection. If the chart was right set up, you might be having your target for this trade be up here at around 34 cents and so forth. So I will go over this more in the bonus video. Just wanted to quickly throw that out there as a good little helpful tip. All right, my friends, now as we wrap up what's likely turned into a fairly long video, here is the final part of this series of charting the XRP. We want to circle back and explain, or again emphasize, the importance of checking these other charts that I always check before I even enter any potential trades. Now you'll want to look back to the first video where I talk about the charts that I check, which is the DXY, the S&P 500, and of course Bitcoin. Now right now, just to finish this video up, I'm just going to go over the DXY again, just to explain that if I was looking for long ideas on XRP, if it's a short-term trade, maybe I'd be looking to make sure that we, keep this area above us as resistance, which, back here was resistance before it broke above and went on its run. If that's a bearish retest of that area and we see some downside down here to the 200 moving average, which if you remember in the part 1 video, I mentioned there was the idea that we could see some downside first, maybe to retest this, which would be good for stocks, or maybe we see an upside move first up to here, which would be, bad for stocks. So these are the things I'd be watching on the DXY, if and when I decide to enter the XRP trade. The ES1, which is the S&P 500, it's really just as simple as we have this major trend line of resistance, which has been resistance on multiple occasions, dating back to the end of last year, and we're kind of at that area right now. So, would I really want to enter a long position for XRP if this doesn't break out? Maybe a short-term trade for a couple of those targets. If I zoom in and see some bullish patterns being broke on these lower time frames, this is an area that's been previous resistance. Maybe it bounces at this horizontal line. Maybe we can get a real short-term trade on XRP. But any major trade to the upside, I'd really be looking for a breakout, retest, and pushing up this direction. And then again, there's some confluence for some short ideas, which I will also cover in the bonus video. But I just wanted to really end this video out by emphasizing the importance of understanding that you need to use all these charts in conjunction with each other, to really govern, if and when you decide to execute these trades. I really do hope you guys found some value in this entire series. If there's anything you thought I could have done better, or if there's anything you'd like to see in the future as far as other potential series or ideas for videos, feel free to leave me a message in the comments section, or of course join our Telegram group, send me a DM in Telegram. Other than that, I do appreciate everyone that stopped by and watched the series, and as always, I hope you enjoy the rest of your day, and on your way out, if you can do me a favor and like and subscribe, and we'll catch you in the next one. It's T-A